Hey guys, let me fix this shit up. All right. How's everyone today?
Good thing, Scott.
Hey Stephen. All right. I'm not even sure how I am yet today. Okay. Oh, look at that decreasing volar on the 10-minute. That is either going to roll over or shoot to the moon. All right, we have Bollinger Touch, and let me just check that we're not in decreasing volar. We can't be in decreasing volar. No. All right. Let me just load my trading platform while I'm doing this. Righty. Okay, we have touch of the Bollinger on 5. Do we have it on 10? 430 and 429. We do not. 429 and the high is 428. We do not have a touch of the Bollinger on the 5, on the 10, sorry. Now we do. Alrighty. So what we're seeing now looks suspiciously like another leg up. We'll watch it prove me wrong, but we don't really have to think about that. All we have to do is really follow the rules. And we have confirming evidence on the 5, confirming evidence on the 10. So we're waiting on touch of the Bollinger, lower close, higher close. It'd be nice if it'd be all the way out here. That gives us mean reversion without a true change of direction. So at its heart, what we're trying to do with Bollinger confirming evidence is to capture just a little bit of mean reversion. So we're not betting that the market's just gonna, totally reverse. We're just betting on just a little pullback. Everyone's got a bit too carried away with themselves and FOMO'd in, and we're just gonna ride a pullback. That's all we're going for. This will be a setup if it's a shooting star when it closes in a minute. Unlikely, but possible. So if you're watching this and you're trying to figure out how to get the execution skill necessary, most of what we call execution skill is about just being prepared and being willing to prep an order that's probably not going to be a real order. So here, there's probably only a 20% chance this is going to be a real setup, but I'll prep the order anyway. And that's what good trading is. So the low here is 43.3 pips. The high here is 44.5. So the nearest half pip below the low is 43 pips. and the nearest half pip above the high is 45 pips. So that's risking 2. We size it for 3, and I happen to know my position size there. I'm just going to whack it all in my trading platform. So if the okay, order place. Let me just double check my orders right. 43.3 is the low, 43 is the order. Okay, so this is a setup. We need to make a last check that the close is not a higher close, and it's not, it's an equal close. Our order to go short is at 43 exactly, so it may get a fill here, probably will get a fill. And because this is only risking 2 pips, we the commission structure for this will take a massive bite out of us. So instead of that, we size it for 3 pips and we go for 3.5. So we're risking 2 pips to make 3.5 pips, which flips the trader's equation in our favor. So it makes it doable. Okay, still no fill. Anyone else got a fill yet? Now, you'll notice that this is kind of an ass-puckering trade to take. It's like a counterintuitive thing. Like, I don't want to go short there. This market is going up. Like, it's clearly going up. It wants to go up. It's only viable because we're only going for a little quick bang. We're not trying to bet. We're not trying to trail a stop or anything like that. Okay, got a fill. Okay, and the first thing I do is check all my orders are right. 43 less 3.5 is 39. 39.5, that is correct. All righty. So we are short. And the target so the target is all the way down here. I don't know, might get there. We'll see. The next bar will most likely close higher. It would be unusual to keep going down without a retest. So what made me think this bar would close higher is that you can see we had an expanded range here, and then this range was smaller to the downside with just a little bit of a wick. So what that's telling us is that it's weakening to the downside, and just at the end we were starting to get some buying pressure. So the big question is this buying pressure going to soak up all the buyers, leaving the way clear for a further decline, or is this going to look like support is held and bulls are going to jump in and stop us out straight away? So that's the battle here, and it's not looking good for us. And nearly stopped out. Okay, loser to start the day. Wow. Okay, so the market has chosen, it's definitely going up. Screenshots. So we may get another re-entry here, which would be annoying because I think it's probably going to lose as well, but I will take it. Hey, Sherry, how are you, man?
Hello, Scott. I'm good. How are you?
Yeah, I've had a really good day of work. Thank you.
You guys use RTC short?
Yeah, we already had one trade, one loss. If we're in an uptrend from this bar, when we have the highest close in the uptrend on a downtick in volatility, which may or may not happen, we stop taking short trades and only take long trades. So because this wasn't the highest closing, the trend, we're not in decreasing volume, by the way. Okay, this is a trade. Shit. This is a trade. Okay, I gotta place this. Close 45. Round. Okay, order placed. Same order as last time. If you fuck up like I did then, and you didn't notice until it was too late to get an order prepped, handy thing is to have the previous order prepped and you can adjust it on the fly. In this case, I was lucky and it was the same order. Hopefully this won't get a fill and it'll break the high. Once it breaks the high, that setup is off the table. The high is 469. We're at equal highs now. Oh, 468 and 469. No, that order is cancelled. All right, so thankfully it doesn't look like we're getting a setup here, which is good, because this would be a shitty setup. I wouldn't want to be short here. Okay, we're going to keep an eye on the highest close in the trend, which is here, which is 464. And now looks like we're going to have the highest close in the trend, but on an uptick. Okay, so we're going to keep an eye on the time here, and it's going to be rolling over in 10 seconds. And looks like we're going to be in decreasing vol. So an easy trick is every time you get the highest close in the trend, you just check. Highest close in the trend, it's on a downtick, meaning that it went down from this value to this value. Standard ATR 14. We are not taking mean reversion, which is good because mean reversion sucks right now, and we don't want to do that. Instead, we're waiting for a touch of this line and then one of these hammer candles. Now, if you are using TradingView and you want to have this little convenient HS, someone programmed that for us, and you search by searching for capital HG, and you can see it here. It's this one. Joseph built it for us. So. So we have to watch if this value in ATR breaks here. So the value here is 153. Here we're 154. So now we're back taking mean reversion trades. So we're back taking short trades again. We have to be alert. Is this fucker going to touch the upper Bollinger? It hasn't yet. The upper Bollinger is 502 and the high is 501. That can change. If it closes lower, this Bollinger is going to bend a bit down. 501 and 501, we have a touch. We have a touch, and we have a touch. So now we're looking for mean reversion. Okay, so we have the highest close in the trend again. We have to check once more. Is it an uptick or a downtick? It's an uptick, so nothing to do. If this is a shooting star, we would take this as a short play. Otherwise, we're waiting for a lower close than a higher close. All right. So a minute and 35 seconds to go before the rollover. It looks likely that this will be a setup. So there's a couple of things we have to watch out for. The first is that if this close is higher than this close, we have to check, are we in decreasing Bollinger? Again, cancel the order if we can. The second thing we have to check is where is our target? Is it worse than here? So our entry would be 48. Our stop loss would be 50 and a half. So we're going to size that for 3 less 3 and a half. So 48 less 3 and a half is 44 and a half as a target. And that's okay. Target trade is off the table because we've broken that old high. So our rules are touch of the Bollinger, lower close, higher close without breaking this high. We've broken this high. We need to check, does it make a second touch? righty. It looks like we made another Bollinger Touch. The Bollinger is 512. The high is 515. We do have another Bollinger Touch. We are at trend ATR high, so we cannot, by definition, be in decreasing volume mode. All right, so we have our three-stage process. One, touch of the Bollinger. Two, lower close without breaking this high. We're waiting on, firstly, this bar to close. It's going to close lower. And then we're waiting on a higher close without breaking this high. And then we're good to go. Yeah, I'm just going to check if this closes higher, is this going to be a setup? I don't think it is. So our entry point would be 48. Our stop loss would be 52. That would be 4 for 4.5. So 48 less 4.5 is 43.5. And that would take us all the way down here. That's too far. About here is the maximum. Okay, so we have a setup, but it doesn't fit our risk reward filter. The target's going to be way down here. It's too far. Maybe this one will be a little better. So if that entry stays the way it is, that would be here, still too far. And this is not a good setup yet. It's a good setup once it goes up a bit, fails to reach this target and goes down. It's kind of crappy right now.
Hey Scott, we talked about a situation like this once before, and I'm forgetting what that was. But right now we're not getting a fill because it's not high and tight. So
Yes.
let's say the price goes back up and touches the upper Bollinger without breaking the highest high in the
Still,
trend.
that would still be fine. The setup's still in play for 20 bars, excluding this candle, counting 1, 2, 3, 4 up to 20, which never happens, as long as it doesn't break this high and an equal touch is okay. A double top is okay, but a single pip above is not.
Yeah, that is understandable. That I know. There was another situation when we had a situation where we touched the lower Bollinger again. We were looking for a long setup, but our long setup never got filled. Then we touched the lower Bollinger again, and then but the previous Bollinger touch low wasn't broken. So what we did was that we started counting it again from the new Bollinger touch. A few weeks back, that would happen. So I was a bit confused about that.
It becomes a real pain in the ass and confusing then. On my list of things to do is to go through those and find and separate out the ones that are like, 10 bars deep from the ones that are like 2 or 3 bar patterns like this, and see if there's a difference in the edge. That's one of the ongoing things on my list to check now we've got enough data. But yeah, I got carried away this morning checking other stuff. This may be a setup here. So that would be an entry. No, that's not a setup. 48.5 and 52 would be 44.5 all the way down here. That's too much. And you can see perfectly the reason for the high and tight filter. A target down here, which is exactly where the target is just too far to be a reasonable mean reversion target. Kenneth has a really good question. If there's confirming evidence, but the trade isn't high and tight, do you recheck the evidence if you get a high and tight entry on the later bar? Yes, you do. The confirming evidence has to be at the close of the setup bar that you're planning on taking. And it's a really good question because the reason for it isn't obvious. The reason for it is in a practical sense, if you have to keep track of it on a continuous basis, it's like something that you have to keep in your head all the time. And it becomes a really a difficult thing to mentally juggle, especially if you jump in like halfway through a day or you stop and then start again. So it's much easier if you just have a single thing. Okay, I'm going to check it when I'm taking the trade. Really good question.
Yeah, Scott, about this thing, checking the confirming evidence at entry point, it's mostly, I would say, about trending with the pullback. Because normally the trades that have Bollinger touch is confirming evidence. I think.
Yeah. Okay. So let's dig in a little bit to what Sherry is getting at. If we're talking about Bollinger confirming evidence, this is so you can see where the cursor is here. The cursor is here on the 5 and here on the 10. This is a fundamentally different thing than if the trade keeps coming down, hits this lower Bollinger, and then we've got trending and trending confirming evidence. So Bollinger confirming evidence, this bar, it doesn't really change. We've got the confirming evidence now. Every single bar will at the time of entry will have it. But in a trending situation, that could change. It could stop trending. It could do something else. But a touch of the lower Bollinger here and then a long pattern is a much better trade, like night and day better trade, roughly double the edge, going long here rather than short. And the reason for this is obvious. Long is better than short in this situation. Like, what you want to do? You want to go fucking short, or you want to go long? I want to be long, but I don't want to be long up here. I want to be long after a pullback, and so hopefully we get this lower Bollinger rising up into it, and then another long setup. That would be something I'm keen to take. Another good question from Kenneth. So do you check for high and tight before looking for evidence? I kind of keep track of them both. I keep track of confirming evidence all the time. And when setups start forming, I do I call them scratch pad calculations. So you might have noticed that when we're here, I did like a check. If this closes higher, where is the target going to be? It's too far. So if you're looking at what differentiates the better traders from the more average traders in this group, and you want to become one of the better traders yourself, the thing to do is to be prepared to do a lot of calculations that are a complete waste of fucking time. So you calculate things that aren't going to be an entry, you check things out all the time, you stay on track of the time. That's all good trading is with this system. It's just like being ahead of the game, being willing to prep 2 orders for every one you place. Just, do your job in a competent way. And what is bad trading? When I'm trading badly, and you'll notice it sometimes, for me, bad trading looks like you'll see me sometimes go, oh, fuck, quick, got to place an order. Like, oh, fuck, oh, shit, missed that one, fuck. Or someone will tell me and I didn't notice, and I'm coming to it late, and I've got to check high and tight and confirming evidence really, really quickly. And when you see me doing that, that's me fucking up. So for me, fucking up now isn't like I missed the trade or I skipped the trade or I broke the rules or any of that bullshit. Like, we're way past that. For me, bad trading is a little bit behind the 8 ball. Okay, so you'll notice that we have touch of the Bollinger, higher close. We're waiting on a lower close. We don't have to worry too much about high and tight in this situation because the target can be all the way up here. So it's not even going to be an issue. I probably wouldn't check, 3 out of 4 times unless it was stupid. I wouldn't check. And you'll see our confirming evidence is trend up on the 5 minute. Trending is a 2-stage process. touch the upper Bollinger, then we start trending up from this bar. On the 10-minute, same rule. Trending is a two-stage process. Have we touched the upper Bollinger here? The upper Bollinger is 429, the high's 428, so we haven't. We touch the upper Bollinger and we start trending from the close of this bar. So we're trending on both. Unless we break the low here, this is going to be a setup. Okay, and a nice setup too. So the entry would be 43, maybe that's going to change, and the stop loss would be 41. So we're going to size that for 3 pips. Target is 6. And we have a minute and a half to go, but that this looks like the one to me. Okay, so we talk about keeping track of the time. It's 2:53 and 15 seconds here in Thailand. So if this breaks the low, this setup is off the table, and the low here is 413. Equal low of 413 is okay. Okay, so it's worth noting on my Interactive Brokers data, I have a lower low in this bar, but I'm taking my setups off the TradingView data, so that's what I'm doing. Okay, and we have a setup. Here we go. Okay, so now we're, Kenneth, another good question. Does that mean that you set your levels based on TradingView and not IBKR's data? No, I do not. I take the setups off TradingView and I take the nearest half pip above this bar on Interactive Brokers and the nearest half pip below this bar on Interactive Brokers. 95 times out of 100, that'll be exactly the same. Very occasionally, like this bar, there was a little bit of wiggle. And a very important thing to notice is that because FX is not a real market, there's no such thing as the FX market, like there is the stock market or the futures market. This wiggle that you get, the fuckery you get between data points happens at turning points. And it's very important to understand that this is a very old and very well-tested edge called Dow theory, invented by Charles Dow, the Dow Jones dude. And what he found is that if this downtrend is real, it should be going down on all related markets. So he did his research on the Dow Industrials and the Dow Transports and the Dow Utilities back in the railroad days. And what he found is that very often turning points would make a low in the transports and not a new low in the industrials, or vice versa. Now, it turns out that edge carries through right the way down to tick charts and 1 minute charts and 2 minute charts and all kinds of stuff. And not only that, but that edge holds not just for the Dow Industrials and the Dow Utilities and the Dow Transports, it holds between AUD USD and AUD futures. It holds between gold and silver. It holds between 10-year and 30-year bonds. It holds between different FX brokers, which is really, really significant. And Harman, what made you decide that the low is the turning point? I didn't decide. I don't know. What I'm saying is that there is an increased probability of weirdness in data around the turning point, and I'm stopped out. So it just made a fool of me there. But there's any time that you get data weirdness between providers, like you're chatting to someone else who's trading the system and they made a new low and you didn't, or like it's a setup on my data but not on his, that's usually a pretty good setup. That's something that makes me prick my ears up. It's not relevant to how you trade. It's just relevant for your knowledge of what's going on.
Scott, we've got 2 days to go for this month and for this year too. So by far, this month was December 2020 was not that attractive month. It was a bad month for the system so far.
Yeah, for sure. That's okay. That's what trading is, man. What time do I normally start and end trading? On Tuesdays, I start at 2 p.m. my time. This first hour of trading, which is finishing in 10 seconds, is the worst edge. It's actually barely an edge. So I would not recommend doing that. The only reason I do it is because I started doing it that way and inertia. I didn't want to change, and I didn't want to feel like I was juicing the records to make them look better than they are. So even though 2 a.m. Eastern Standard Time is to 3 a.m. Eastern Standard Time is the weakest hour in our system, I'm just going to pay a bit of attention here. This could be a setup. Okay, if this closes a hammer, this is a setup. All right. I'm in 2 p.m. Bangkok time, which is 5 p.m. Australia time, which I believe is 8 a.m. UK time and the middle of 30 in America. All right. This probably won't be a setup now. But any lower close. Good question, Stephen. The 2-minute chart is trending down, but we cannot be in decreasing vola down while we're trending up on the 5 and trending up on the 10. So as long as this stays the same, trending up, we don't have to worry about it. And the reason for that, you'll see this is a time where we really want to be looking to the long side. We don't want to exclude long trades here. All right, waiting on a lower close. All right, still waiting on a lower close. High and tight isn't going to be an issue here. We don't even need to check. All righty, so let's take a look what the position size is going to be. If this stays the same, the entry is 43 and the stop loss is 39, so that's 4 for 8. Okay, prepping that order. And we have 45 seconds to go. This is going to be the one. So what I like to do in terms of order placement to make it so that it's hard to fuck up. I have one of those. It's not going to be an order now. I have one of those sort of last chance. Are you really sure? Warnings set up on my trading platform, and I place the order, and it says, "Are you really, really sure?" And then I wait until the right second to place that. That's how I do it anyway. And the two right charts are 5 minute and 10 minute. 5 minute on the top, 10 minute on the bottom. Stephen, the settings are 8 EMA and 21 EMA. I just use the built-in ones too. I don't like using fancy stuff. And you could change those numbers. There's nothing magical about 8 or 21. I used them in another system, so it was just convenient. So there's nothing. I certainly didn't optimize them. Yeah, annoying to miss out on this one. So hopefully we get a pullback and we get an entry here. Hope so.
About that question that somebody asked, Scott, now this is the right time. If you get a pullback, so this would be the right time to check the confirming evidence again.
Yes, exactly so. Exactly so. So Herman has a question. Can you explain again how you managed to find the turning point again? Okay, so let me clarify. It's not how we trade. We just follow the rules of the system. But in a price action sense, what you're going to find inevitably, and I'll give you some examples, is at major turning points, especially in major moves, and this happens on all time frames, you'll find weirdness between related markets. And when we aren't likely to get a setup, I'll show you a couple, and I'll show you what I mean. So this is not going to be high and tight. It's going to be well past there. Okay, so let me explain what I mean. Let's take a look at, say, the thing of the hour, Bitcoin. So let's go back in time to 2017. Look at when Bitcoin made its highs. The week of 11th of December. Let's pick Ethereum. 11th of December is way back here. Ethereum kept going. Bitcoin didn't. That's behavior that you see again and again and again. Let me show you some more. Let's take a look at gold in its last bull market. There we go, way back in 2011. I caught that one. Fuck you. So the gold high, 15th of August, 29th of August. Now let's look at the silver high. 29th of August 11 was the gold high. Let's go back to 2011. So silver had topped out in 25th of April. Gold kept going. And that behavior is something that we see on every time frame. We see it right down on 1 minute charts, and we see it on monthly charts, and you see it in stock markets, you see it in commodity markets, you see it in crypto markets, you see it everywhere. And it's a very useful sign of things. And the usual way to look for it in currencies is, this is Euro US dollar. Let's look at, sorry. Let's look at the Euro dollar futures. And look at the 2 minute chart. And you can generally notice small differences coming towards turning points. You notice small differences between the way things happen. Okay, so hopefully we get a decent pullback here. It's probably time for me to start working out where is good enough. and just eyeballing it, probably around here is going to be where I have to start checking. So we have 20 bars excluding this bar. So 1, 2, 3, 4, 5, 6. We're nowhere near it, but it's good to keep on top of it. But Harman, as a general rule, trying to figure stuff out from price action and make your best judgment calls and shit like that, it's a very difficult way to make a living. Like, I can do it for one day, but I can't do it 5 days in a row. You know what I mean? Like, I'm just not good enough. And I know a handful of people who are good enough, but I'm not one of them. So I wouldn't want to pretend that that was a viable way for most people to trade.
Scott, for the people who are not trading regularly, like they're doing it on and off. So I was just thinking, so if you don't trade the system, regularly, but what you do is that you keep a regular check on the system. Like after every day, you sit in front of the screen and do the math. So one thing is for certain that we are going to have drawdowns. Like
for sure. That's inevitable, and it's very important to do that. And the reason for that is that when you start losing money, it's really, really confusing why you're losing money. So there's 3 aspects to it. Does the system suck? Do I suck? Or am I just unlucky? Like, did I just stand up to take a piss and miss a good trade and then sit back down after my piss and took a losing trade? Is that what happened? And so the interaction of those 3 elements, my suckiness, the system suckiness, and random shitty luck, that can be very, very difficult to unpack, especially when you're drawdowns hurt. Drawdowns are emotionally not enjoyable. So it's very important to try and unpack it as best you can. And the best way that I've found to do it is to discuss with another human being. So for me, it's usually a case of I can't save my ass and my face at the same time. So as long as I want to look like I'm a really good trader, I'm in danger of fucking myself. So it's important for me to have a bunch of guys that I can trust and say, oh, fuck, I hated trading last month. It was just devastating to me. I didn't want to do it. Didn't want to sit down at the screen. And you know, it's important to be able to be honest about that stuff, because keeping it bottled up causes you to make mistakes. That's actually the root cause of most of the trading mistakes we make, is having feelings about trading and not being able to talk about them and not being able to just feel them. Like, trading is hard. Like, this is a hard fucking way to make a living. And yeah, that's just the truth of it.
And about those that period, like drawdown period is inevitable. That is going to be. There is going to be a part of the month where it's going to go down in the drawdown. 100%. What you do is that you wait for the drawdown, and once you see that the drawdown is substantially like over a week or and a half or something, like for somewhere around 5 hours or something, whatever you feel good is for you. So once the system goes, let's say in 5 hour drawdown, you jump in from that point on. You start 6 hours trading for the next 2 or 3 weeks or maybe 2 weeks, whatever. And you get that.
So that's the smart way to trade any system. And the guy who taught me that was actually Ed Sekoda. And he would always wait for a 20% drawdown before letting investors trade in his fund. He would hold their funds in cash until the next drawdown and then dump it in, because it's emotionally, it's much easier when you feel like you're playing with the casino's money. You know, if you start trading and you print some money and you're in profit.
Laptop.
It's possible that we get a short setup here, which wouldn't be the worst short setup in the world either. Yeah, I'd happily take that short. Darthanian, this is a 5 minute and this is a 10 minute. So it's 2, 5, and 10.
Scott, I have this irrelevant question.
Sure.
That if you're trading CFDs for stocks,
Mm-hmm.
and one of the companies splits their stock, and because you're trading CFD, let's say on a whatever broker, and for example, Tesla splitted last month. They split their stock, and when they
Say again, please. I missed that.
I said Tesla splitted their stock last month. Tesla company, Tesla Motors, they had a split of their stock last month.
Oh, a
So
split.
yeah, stock split.
Yes.
And if let's say at the price at the time before the split was $1,500 per share, and you were trading CFTs, and you had sold somewhere around 1,500, and then when the stock split, the value came back all the way down to 300 or $400.
Okay.
But you aren't having actual stock; you're having CFTs. So does your broker like give you all those offers like in case of that split?
Generally, they do, but they don't generally adjust your stop losses. So if you thought it was like a $30 stop loss, you might find that that $30 stop loss is now $30 on a half split. So it's like your stop is way too close. So generally they do, but they don't have to. They're not legally obliged. They're not legally obliged to not fuck you. But most of them, like I'm talking like IG markets and you know things of that nature. They don't fuck around. So they it's not possible for them to get the stop losses right, but you're still in the thing, right? Like you know what I mean? Like they don't. You have to recheck everything with CFDs. It's bottom line. But you should be okay most of the time with most brokers. But you can't say for sure because CFDs aren't really. There's no like hard and fast rules with CFDs. It's like FX. It's a bit Wild West.
Yeah, you're right. We might get a shot over here.
I hope so.
Would you like this shot?
Yes, I would. Yes, I would. And why do I like it? There's three possible situations, right? Situation one, we're in an uptrend and it's just going to keep going up. Situation two, this uptrend's gone as far as it's going to go and it's going to reverse. Unlikely, maybe a 20% probability. Situation three, always the highest probability is we're going to fuck around and dick us all around and make a choppy mess and form a trading range. If we form a trading range, we're likely to form a trading range all the way back down to here or at least to here. So we don't really need a complete reversal. You know, a pullback that on the 10 minute that would look only to about here or so would make a perfectly fine trade, get us our target and get in and out.
We might go in DV.
I think that's likely. And confirming evidence wise, this bar closes in 4 minutes. And this bar closes in 4 minutes and will most likely close in DV. So we are in DV.
Already in DV.
Okay, so Harmon, Harmon who's in the chat is learning about price action now. And so I may as well talk about price action until we get it set up anyway. So let's talk about price action and how price action differs from system trading. And both are good. You know, I'm fairly well known for price action trading. Price action trading is extremely difficult, much higher skilled. And let me just check, are we out of decreasing volatility? Yes, we are out of decreasing volatility. So we're still looking for a short. So price action is about reading the story that happens. And the major components of the story that happens are the range of this bar, each bar, how much overlap it has with the previous bar, and the upper and lower wicks. There's more to it, but I'll get to that. We'll just do like a little overview of price action-y type stuff. So when you get overlapping bars, what does this overlap tell us? This overlap tells us that both buyers and sellers are becoming evenly matched. It tells us, so most of the time, all markets are very like balanced on a feather between buyers and sellers. Like one extra buyer can push it up and one extra big seller, not you and I, but like one extra player can push it up and one extra seller can push it down. So markets are a lot more finely balanced than you would really believe. And so price constantly tells us a story. So if we look here, there's a couple of things that we know about trends. Trends that kick off strongly tend to have a longer life to them. Now, what is a strong kickoff to a trend? If we go back to the very start of this, way back at the start of the day, look at this fucker. The start of the day, see how strong it kicked off? That is a price action sign that is probably going to last a while. And then the next thing that we're looking for is what is the pullback like, the first pullback. This first pullback is very weak. It tells us that there's a fundamental imbalance between buyers and sellers. Buyers are in control. Now, that same thing happens in reverse. So trends end in one of two ways. They end in an extreme of high volatility or they end in an extreme of low volatility. They rarely end any other way. Now, when you're reading price action, you're trying to narrow down the possibilities. So if we look at the 2-minute chart, big fucking uptrend, right? Like an undeniable big fucking uptrend. This can only end in a blow off top of volatility. We're looking for a big spike in volatility to be a true reversal. Like for this all to end, it is unlikely that this is a permanent ending while it's going up in this decreasing vol situation. So if we're thinking about price action, let's look at this bar. It opened at the lows, very small lower wick, no selling pressure, closed at the highs. The buyers controlled the start of the day. The buyers controlled the end of the day. There was no selling pressure. No one got to the end of this bar and thought, fuck it, I'm out. I got to sell. And we've got an expanded range. What does that tell us? It tells us that the power is increasing to the upside. Let's look at how little overlap. We have very little overlap. Now let's look at the next bar. We have more overlap. We have about 30% overlap, and we have a drastically reduced range. What does this tell us? It tells us the market is going up, but it's weakening. It's not out of puff yet, but it's just starting to run out of steam. And where are we here? It looks like in 6 seconds this bar is going to close. We've got a drastically reduced range, and we've got a failed attempt to drive the market up, which is closed down. So what does that tell us? It tells us that in this 3-bar pattern, the market's running out of puff a little bit. We are in decreasing vol mode, so we cannot take short trades. Okay, so what throws us into taking short trades again is breaking what's called a pivot too high in ATR. Now, if we go to ATR and a pivot too high is a high with two lower bars to the left of it and two lower bars to the right of it. So the closest pivot too high is this fucker right here. You can see it. And the ATR value to beat is 0.000233. And that's the standard average true range parameters of ATR 14. All right, guys, I'm just going to go to the bathroom. I'll be back in a sec. Okay, this could be a setup. So I'm going to prep an order.
But we're in DB spot.
Yes, we are. Thank you. Thank you. Harman, it's not a decision to go short or not. So we're never ever making decisions here. We're always going short when the rules tell us to, and not going short when the rules tell us not to. So our rule is for us to stop taking short trades, we need to have the highest close in an uptrend. So we have to be in an uptrend first. So to be in an uptrend is a two-stage process. Stage one, touch the upper Bollinger. Stage two, have a single candle with a higher high and a higher close. So we start uptrending here, and when we have the highest close in the uptrend now on a downtick in volatility, a downtick in ATR. So here you can see that this bar from here to here, we went slightly down, and then this bar we went down again. So at this point, we stop taking short trades, which is a good thing because short trades are shitty right now, and we wait for a long trade.
Scott, while we're at it, can we check a couple of trades back in the day?
Sure.
436 on 10th of December.
Chris Wright, how are you, man? Merry Christmas.
Sorry, I was on mute there. Yeah, Merry Christmas to you too, sir.
How are you?
Yeah, pretty good, thanks.
Let's see here. Okay, 436, you said, Sherry.
Scott, I guess this was resolved. I'm sorry. My bad.
Okay.
We talked about this already.
Yeah, I think we.
Let's go to another one that's 606 on 11th.
Say again, please.
606 on 11th December.
646.
Yeah.
Okay, 646. That looks like a trade to me.
606, Scott.
Let's just check that. Okay, trending down. Do we have a close above, close below, close above? No, we don't. We have a new low. So I'm remembering this trade. Did we go through this one before? I'm pretty sure we did.
No, we didn't, Scott.
Okay. Yeah, this is a trade. It looks like a trade to me. Yep, definitely a trade.
No, wait. You're talking about 658.
Sorry, 658?
Which trade are you talking about? I said 606. It's a long, RTV long.
Say again, please.
606.
Oh, 606. I thought you said 658. 6. Okay. Looks like a trade. Let's have a look.
I had doubts about it being high and tight.
Yeah, that's high and tight. There's no argument there. The Bollinger low is 167 and the low is 165. That's a trade too. It's a losing trade.
And so this is a losing trade, or this is not high and tight?
No, this is a good losing trade.
So I guess we need to put it in the baseline.
Yes, it does. Let me.
I do that. I have the data for this in the baseline. And you go to 412 on 14.
Hold on. 11th of December, 606.
Scott, I would put it there for you. I have this data in my.
Okay, thank you, man. Appreciate it. What's the next one?
Yeah, the next one is 412 at 14th. 14th December 412.
All right. Decreasing vola. That is no confirming evidence on the short. Still in decreasing vola. The ATR value is 290, 291 out here. So no, this is no trade because we're still in decreasing vola at the time of Are we? Let me just double check that. No, we are. No, we're trending down. Yeah, no, we're in decreasing vol. That's no trade. Annoying, but there it is.
Because of
Really?
the 5 minute, right?
Sorry?
Because of the 5 minute stop trending. That's why.
No, because we're in decreasing vol.
Yeah, that's what the 5 minute touched the Bollinger at 4. So that is when we start considering decreasing vola down because we were trending up already in the 5.
So let's check where the lower Bollinger was, and the lower Bollinger is difficult for me to see. 422, and the low at 4 ending at 405. Okay, so that had already touched the lower Bollinger by here.
408 is definitely putting us in DB down because we already touched the Bollinger on the 5, so we're not trending anymore on the 5. So yeah.
Yeah. Yeah, that's no trade.
Okay. And the next one is 308.
Same day?
No, 15th. Next day, 308. 15th December, 308.
15th? 308.
Yeah.
All right, let's have a look. Okay. 308. Okay, we're not in decreasing vola. Where's it? Definitely downtrend, no argument there. So let's look at where the target is. The entry is 38, the stop loss is 33, so that's 5 for 5.5. 38, that's 43.5, and that takes us too far. Yeah, no, that's no trade.
What's the target, sorry, for this?
43.5, isn't it? Hang on. Look. Yeah, no, it's too far.
43.5 is too far.
I think so, and I think it just got there too.
Yeah, it just touched it 43.5. I thought you would say this in hindsight because in these kind of situations you do take bets.
Chris, what do you think? I don't think it is. I'm interested in other people's opinions.
If we apply a straightforward rule to it,
So
right?
43.5 is the target, which is right here. What do you think?
Move it to the end of the chart. There's like real time.
Yeah. There.
I mean, I think it's acceptable to take that.
Yeah.
I would in real time, I think.
Yeah, it's hard to say no in real time. I'd say that one's right on the borderline. I'm happy to include that if you want to include it.
I mean, Scott, because my reasoning was because the previous pattern, the previous price action, I mean, it was the downtrend, there's no doubt about it, but it was a bit, somewhere it was a bit messing around. So I thought maybe this is a fine range to take.
The price action is definitely supportive. There's no argument the price action is supportive. Yeah, I'm happy to include that. Okay, 308.
Okay. So 308. I have the data for this. I would do this for you. So right now we have 606 and 308, 2 trades in the mix, right?
Yes.
Okay. So the next is 646, same day.
Sorry, say again, please. Actually, we got
46.
This might be a trade. We've got to pay attention here, guys. All right. So when you get a situation like this, you got to have your standard order Okay, now, do we have confirming evidence? We are trending with the pullback on the 5, and we are trending, but not enough pullback on the 10.
Bollinger Walk.
So it is. So it is. All right. So if we get a hammer on. Okay. So useful thing for guys who are figuring out how to trade this system. It's obvious once you've been trading this a while that hammer candles in the uptrend and shooting stars in the downtrend are the most difficult execution wise to do. Why? Because you don't know that they're forming in advance. You just see them like, oh fuck, it's a hammer, let's go. So the way to avoid last minute confusion and fuckery is this value here. If we look closely at this, it's 0.000200. What that really means is that our average over the last 14 bars was a 2-pip range. So we can reasonably expect this to be our minimum range of 3. So if this value was 0.0005, I'd prep a 5-pip order. If this order was 0.0055, I'd prep a 5.5-pip order. If it's anything less than 3, I'd prep a 3-pip order. Yeah, that's and that generally works out really, really well. Chris, I just realized we've come up on a bit of a corner case, right? Because it's Bollinger Walk and trending. Do we go for 1R or 2R? Oh, no. We're touching the 21 EMA, so we're going for 2.
Correct.
Yeah.
Yeah.
Scott, regardless of the evidence, we are going for 2R. I guess that's what you guys decided.
Sorry, say again, please, Sharon.
Yeah, regardless of the
regardless
evidence.
of the confirming evidence, we're going for 2R. Yeah.
Yeah. I remember Chris mentioning this particular point back in the day. So yeah. And another thing, for this 2R target for hammers and shooting stars, those are touching the 21 EMA. We're not moving the break even, moving the stop to break even, right?
I'm moving the stop to break even. Emotionally, and yeah, I am.
After 1 hour.
After 1 hour. John did his data on 1.1R, but I think it's too fussy to have 2 different values there. I'm just moving stop to break even at 1R. And we've had several, in the last month alone, we've had 3 instances where it's made 1R, reversed and stopped out for break even, but not made 1.1R, which is really weird and something I wouldn't have expected to have seen. But it is real. So.
Yeah, and even considering this month, Scott, this December, if you were going for 1.1R targets instead of 2R targets, we wouldn't have been that deep down into the drawdown, and we would have been a greater. But,
Correct. So this brings us to an interesting thing, Sherry. When you go for more, you take more risk inherently, right? So the effect of going for bigger targets is there isn't shit for free in this game. Like what it makes is your drawdown slightly more protracted and slightly deeper. Any increased target will do that by definition. And that's the deal. That's just the way trading works. Like you want more, it costs.
Yeah. Plus, Scott, if you're even going for, let's say you're going for 1.1R target, let's say you don't want that deep into the drawdowns when the periods are bad. So if you move the stop to break even after 1 hour, given that those 3 or 4 trades that we have this month, which went to 1 hour and then all the way back to hit the stop. So I think that is even a good idea. Like if you consider 1.1 hour targets, you still move the stop to break even at 1 hour.
In theory, that's a good idea. In practice,
I'm talking about particularly the trade with 2020 pullback, not other ones.
Sorry, say again, please.
I'm talking particularly about the trades with trending as confirming evidence, not the other ones.
Okay. So that would definitely be one way to do it. What I'm wary of is adding more complexity into the system. I don't like the idea of involving an extra element of luck. Like, so over the past 1,300 trades or whatever, going for 2R targets on trending trades was a slam dunk. It was like 35% better. But in the last month, that hasn't been the case. So luck is cyclical. So it's just generally a good idea to keep things as simple as you can and no simpler than that. Like, I don't necessarily like. I'm happy for slightly increased drawdowns for the level of performance increase that we're getting from that. And I'm not concerned at all that on any specific month that hasn't worked out. Like, that's not even like something I think about. So,
Scott, sorry, Sher. So just looking at the current situation. So the 10 minute, you look at the 340 bar, right? So that actually switched Bollinger Walk off.
Yep. And now we're trending.
Touch the high. But now we're trending. So now we're trending. So
nicely spotted.
we can take 2R.
Yeah, but we also we aren't we trending and we're having Bollinger Walk on the 10 at the same time?
We were, but Bollinger Walk stopped on the 3.
Bollinger Walk stops at in 6 minutes. Oh no,
it stopped. No, it stopped already. That's what I'm saying. The 340 bar had already stopped.
Gotcha. Yes, good point.
Yeah. It doesn't actually touch the Bollinger.
Right.
We might get a long setup here, which would be nice. So, Harman, it's not. Harman's asked how much pullback on the 10-minute chart do we expect. So it's not about what we expect. We're not guessing here. So our rule is, if we're trending up, we need 1 out of our 4 types of confirming evidence on the 5, and 1 out of our 4 types of confirming evidence on the 10. And one of those confirming evidence types is a trend pullback to at least the moving average. And so we have that on the 5, and we have that on the 10. We've got a lower Bollinger touch. Hopefully we set up in the next 6 or 8 minutes or so.
So Scott, have you written into rules the whole Bollinger evidence and the ATR values?
Yes, I have.
Okay, because I'm not up to speed with that.
Okay, I'll send that. Okay. I'll send that through to you later on tonight. It's pretty simple. It's like,
yeah. So all that evidence of adding the ATR values when you were recording your baseline actually paid off in the end.
Okay, so so this is new work. I got up at 4 a.m. and just worked it. One sec. So what we found out of the Bollinger Touch confirming evidence. Actually, I made a couple of YouTube videos while I was doing it today, so it's probably easier if you just watch the 2 most recent videos on our channel. But I'm not 100% certain yet. So to be certain, I've got some data that I kept to one side that I didn't do any of these calculations on. So that I want to be able to check that it holds with my sequestered data, and then I want to check that it holds with Ralph's NQ and ES data and Anthony's 6E data, and there's some AUD USD data floating around. So before I go starting to think that I really know what's real and what's not, I want to test it on all this other data that I didn't do my research on to make sure that I'm not just fooling myself. But this was over like 400 odd trades, but let me show you. So it was Chris Dickinson's idea from the other group, and on the spreadsheet. There we go. I'll just share this with you and I'll post it in the chat. So what I did is I took the ATR values and I took the expectancy for every ATR value and I made a scatter plot because we've been fooled by randomness. And then I winterized the data, meaning pulling out outliers. And there's no real edge there. But the only thing that we saw for sure is that trades with a very low ATR value also have a very low expectancy. That was the one thing that held across every data set. And then I realized that where's my comms estimate? And then I realized that I thought it was a dry hole for a minute. And then I realized that our commissions are drastically higher on small ATR value trades. So the probability is very high when ATR is low that the R value is very low. So I looked at 0.19 and under ATR, or 0.00019, I should say, ATR and under, was an average R value of 3.37. And so the comms is about 0.12 expectancy, and the expectancy on those trades before comms was slightly negative. So after comms, it was really fucking terrible. So when I just take out the worst of the worst offenders, which are the ones that we kind of know are bad, is both small range trades and small range trades where ATR is very small. Just taking those out gives us an average R value after that of 5.7 pips. And it takes the comms in R down to 0.063, or probably on some of the scammier brokers, probably up to a maximum of 0.1, which is doable. And the expectancy rises and the comms lower. So for the first time, we've got on all brokers a positive expectancy after comms. So it looks promising. I'm not ready to stick a fork in it and call it done yet. We may have a trade here. But it certainly looks looks promising to me.
Yeah, this is a setup at the moment.
Sure. Okay. So we keep an eye on the time. We've got 1 minute and 4 seconds to go. Our entry point is 46.5. Our stop loss is 43. That's 3.5 for 7. And let me just set up my position sizing. Okay, and I'll show you the position sizing in a sec. So let's show you how it's done.
Evidence is trending, so we're all good.
Yes. Okay, so we'll place this bad boy in 30 seconds, and then I'll show you guys a little hack for calculating position sizing. Chris, I'd really like to get Bollinger sorted out. That'd make me extremely happy.
Yeah, it would just take it to another level.
Take it to a whole level. Yeah. It'd take it from good to great.
Yeah.
Hey, order place. And what I was missing was doing the calculations with the impact of comms on them.
Right. Yeah.
Because it's like a double whammy, right? Like the expectancy is lower when the range is lower, but also the comms is higher.
Mm-hmm.
So yeah. And for guys who are building their own systems, it's an interesting situation that you find yourself in. Like we were doing this data set on like 450 trades. 450 trades are a fucking lot of trades. but it's still not enough. Like, it's still not enough to like absolutely be like bet your life on it certain. So how do you approach that? Do you just make your best guess, change your rules, and fucking I hope that it's an improvement when maybe it's not? So there's a couple of things you can do. First of all, if you're not really sure, you can take the approach of just removing the worst of the worst offenders. And usually the worst of offenders are at extremes. So that's one way to go. And the other way to go is to check your work by keeping some data that you don't do any research on, and test whatever you've done on that new data to make sure. And that can be a different market. That can be, that's usually the best way to do it, is to pick a different market.
Scott, sorry, just to interrupt that. So that's a slightly different entry that's formed now?
Yes, it is. All right, I'm going to be lazy and just drag my order down.
Yeah, it's 3. So
It's 3?
it's 3, well, 6 pips, yeah.
Okay, so for the guys watching this, so our original order was here, 3.5 for 7. We don't get a fill and we move the order down to the nearest half pip above the high here. So instead of 3.5 for 7, it's 3 for 6. Because I'm a lazy cunt, I didn't read my order. I just dragged it down. And,
Not so much lazy, Scott.
let's call it how it is. Let's call it how it is. And what I'll have to do is, once we get a fill, which we're almost certain to, I'll adjust the order, and my position size is not quite accurate. Okay, Abir, sorry for stupid questions. There are no stupid questions. What's ATR? ATR is an indicator that's on nearly every single trading platform. It's called average true range. You can find it on every trading platform if you just search for it. And it was invented by a guy called Wells Wilder, who was one of the forerunners of technical analysis, in his classic old book, which I have on my bookshelf in Australia, which is handwritten on fucking graph paper. And comms is referring to commissions, and commissions are a major pain in the ass for day trading because the brokers take a bite out of you, and it's something that you really have to track closely, and you have to keep an eye on it. Brokerage.
Rise of rain.
We are here. Go, you good thing. So the target is 250. Actually, my target is wrong. I'm an idiot. So target is 252, right? 46 to 52, yeah. So the target is right here. Now, if we look at the bigger picture, target of here just doesn't seem too ambitious. It seems like pretty reasonable.
So our first target's 49.0, which moves us to break
Correct.
even.
Correct. Okay. So okay, so we move our stop to, as Chris just said, we move our stop to break even at 1R. So we're risking 3 pips to make 6, and we're moving our stop to break even at 3 pips. So 3 pips is 49, right? Which is here. Harman, my preferred market for this is futures, and this is not viable for crypto. Crypto has the commissions and the spreads are too wide for this strategy. You could run it on a daily basis on crypto, but it's complicated. crypto is not the market that you want to be scalping ticks. Crypto is the market where you want to hold something where it's like you buy it at 20 cents and you sell it at $20. That's what crypto is for. This is not the play for crypto. I trade US futures. I don't trade US equities. Well, I have, but I just don't now. I'm primarily a futures trader. That's my greatest experience and my greatest expertise. I'm a shitty stock picker.
Hey Scott, this is Deepesh. Is it okay to ask a quick question while we're waiting for the trade?
Anytime, man. Knock yourself out.
Okay, thanks. I actually bought one of your courses. I think it was a price action basic class. It was videos. I couldn't access much, but I was hoping now that I have got some refresher with this live trading session of yours, I can get back to it.
Sure,
I would appreciate any
username and password and shit.
Sorry?
You still got your username and password or everything, or?
Yeah, I don't have that anymore. So I just emailed Jennifer and was hoping if you can share some advice how to go about.
Yeah, it is easy.
From here on, that I would really appreciate that.
I'll post it in the chat. It's scottphillipstrading.com/members, and yeah, that'll let you reset your password and all the usual stuff. And if you have any problems, just shoot me an email personally, Scott@ScottPhillipsTrading. I'll switch out. We're stopped out again, which is very frustrating. 3 trades, 3 losers for today. So it's annoying.
We might get another long once the 5-minute touches the Bollinger.
So Stephen's trying to get his indicators set up. You can just add extra ones. You can add you can just add it like 4 or 5 times.
So this could be a setup if it was a hammer, but it's unlikely now.
Unlikely. It could happen.
But even a lower close doesn't make it a setup because that hammer candle is the same close as the candle before.
Okay, so Chris is making an interesting point here. We have 2 mean reversion setups. The first one is touch of the Bollinger higher close, and we have an equal close here. The close is 401, and if this is, and the second setup is touch of the Bollinger, then a hammer candle without breaking the low, and that is this setup. And I have to prep an order. This could be a setup. Okay.
Don't worry, it's broken the low. Don't worry.
Harman, the Bollinger Band is the standard 2 and 20. And as a general proposition, when you're building systems, you don't want to optimize indicator values. That's a mistake because by definition, the past and the future rhyme but don't repeat. So the only thing that you really know for sure is that when you optimize your indicators, you've definitely got it wrong.
Scott, while we're waiting, can we check back those trades that we left behind?
Sure. What's the date, Sharon?
15th December,
What time?
6,
6.
6:46.
Sorry, say again, please.
6:46.
All right, let's have a look. Okay, we are trending down 646. Do we have confirming evidence? Okay, let's look at the 5. Well, let's look at the target first. The entry is 56.5. The stop loss is 48.5. So that's 8 for 9 plus 56.5 is 65.5 as a target. So the target is okay. Do we have confirming evidence on the? Okay, we are Bollinger touch on the 5, and on the 10, I don't believe we are trending.
No, you're not trending, so it's not a pullback, so there's no evidence.
No setup. Yeah, no setup there, man.
My bad on this. And 3:48 the next day.
348 on the 16th.
Yeah.
Okay, 346, 48. Okay, so first of all, we're in decreasing vola there, and the ATR is 604 with an equal high, so we're not out of decreasing vola, so we're still in decreasing vola, so no trade there.
Scott, this is really marginal ATR. Me and Nick, we were talking about this. So again,
Okay,
it was a
so
situation like
so here's how you do it, man. Go to settings, set the precision to 6.
I'm sorry.
Go to settings, set the precision to 6,
Okay.
and look at the value. The value is 604. Has to be a higher value, an equal value is still okay. So 604, 604, we're good.
Go to settings and
If you can do precision, some of them show it to a different value. Like we agreed on 6 some time ago.
I don't have that, man. I don't have the precision. Okay, yeah, I do. It's 6.
Okay. Other than let's keep an
I
eye.
guess this is something new, right? This precision. We weren't using this before.
No, I think this is something old.
Oh,
Yeah,
I didn't know about this.
right.
I think it was discussed in the Platinum group, and I set mine to 6, but it was quite a while ago, Sharia.
Okay, I might not have been around.
Excuse me for a sec, guys. I'm just going to see what my wife's doing. One sec. the hiccups. What? Whoa.
You've got a little helper there to amuse you in the lull, Scott.
Yeah. Uh-oh. How are you, Julie?
Yeah, I'm really good. Thanks, Scott. I couldn't get away for Christmas, but c'est la vie.
Uh-oh. Get the hiccups, little bugger. Uh-oh. Okay, come on. Yeah. Hey.
So, Scott, can I just ask a question?
Of course you can, Brad.
So, in essence, although it hasn't been completely bottomed out yet, Bollinger under ATR of
0.0002.
we may not be taking for going forward.
Yeah, I want to make absolutely certain. So that it's kind of like the first rule is do no harm. The first rule is don't fucking ruin your system.
Absolutely.
Who's my baby? Who's my baby? Oh, hello. Uh-oh. That's got to be annoying, doesn't it? Uh-oh. Yeah, I know. I had the hiccups too. Yeah. People. So what do you clap?
Yeah, and Julian, how are you?
I'm good, thanks, Sherry. How are you?
I'm good, sir. And are you doing that automated stuff of yours?
No, I'm not algo trading. No.
But you were up for it, right?
I'm interested in looking at it, but longer term, I've really got to. I mean, you're, I think, much better at the system than I am at the moment, Sheria. So I'm still trying to get to close to sort of 98%, and I'm quite a way off that yet.
Sherry is better than all of us, man. Don't feel bad about that. He's better than me.
It takes me a little time, Scott, but I always get there in the end.
Exactly.
No, sir. No, I'm not.
Yeah, it sounds to me like you're pretty good.
He's good. He's real good.
Yeah, it's maybe because Scott, I was because of your guidelines, I would say. That's it. And because of the kind of overall system that you have for the learning purposes, I think these calls and all this this access to spreadsheets and this everything is really helpful.
Yeah,
Amazing, man.
it's hard to go out there and so when I've learned other people's systems before, it was a case of really have to spend 6 months of your own time working it up, and we used to call it working up a system. And you know what I believe is that we can really shortcut that journey of getting you from, okay, usually I'd go pay someone a couple of $1,000s to learn a system, and then it'd take me 6 months before I could actually trade it, and then half the time the system was crap. So I would lose a bit of money before I figured that out, or I would spend 6 months and figure it out. And you know, it's just nice to give people what I wanted, you know, which is just a little bit of transparency and a little bit of honesty. And who's my beautiful girl? Who's my beautiful girl? Take it back to your mama.
Yeah.
What you reckon? What you reckon?
And to be honest, Scott, I started it last month, from the start of last month, or from the end of last week of October probably. So no, sorry, the first week of November or something I started doing this. So it's been 1.5 months that I'm doing this, and whatever level I am right now, it's in front of you. So if I was to go for that other program that you have, that what do you call it, scalping course or whatever, that where you don't get all of this stuff. So I
You don't,
wouldn't even up to
you don't
this
need-
pace
you don't need it, man.
right now after a month and a half.
Honestly, the instruction in the cheaper course, I built the cheaper course once I was already a much better instructor, and I think the cheaper course there's less stuff in it. Like, you're welcome to take a look at it and decide if you need it. But honestly, you don't need it. There's no things that you don't know that you need to know. There's just, you're good, man. Like, you don't need to pay me any more money. Like, you're like, honestly, you're as good as it gets. So.
Yeah.
All right, we'll take you back to your mum. Oh, bless you. It's my nose. Okay. That might be sunshine tonight. Timeless Man has a question about my meditation. Yeah, sometimes with I've got a pretty serious meditation teacher, and he sets me all this stuff to do. Like, it takes me like hours a day. And he's a serious guy. He spent 20 years in a Burmese monastery. He's like as serious as it gets. And I'd feel weird saying some of the shit out loud. It's just like, honestly, you'd think I was weird if I started to say it. It's like all this weird Buddhist cosmology shit that I thought was like, that I thought was just bullshit. It turns out that some of it is real. Maybe, I guess it feels real. Just meditation is really,
you wouldn't believe how weird it gets.
I mean, honestly, if okay, I'll say it, but you got to promise not to think I'm some sort of hippie fucking weirdo.
Well, I'm not going to think it, but others can vouch for that.
It feels like there's sentient beings in some sort of really deep meditation states, and there's actually something fucking living in there. And that can't be true. Like, I'm a rational man. I don't believe any of that nonsense. I think that's all crap, but it's, so,
you know, empiricism, what that entails essentially is, if you feel the effects of something, it's there. Now you just got to figure out if it's in your head or somewhere else.
Yeah, and I'm not entirely sure, and you know, I'm grateful. I'm grateful to have good teachers. I've got like I'm involved with a community at a website called BuddhistGeeks.com, and my main teacher is a guy called KennethFolk.com, and yeah, meditation is really interesting, man. It's like I wish I'd discovered it younger.
May I suggest something?
Please.
If you're getting weird sensations or some sort of feeling some sort of presence there in meditation, because essentially what meditation is you're just observing your moment with the things that are happening in your head. It's
not actually happening. It's not actually happening in mindfulness meditation. It's happening when I'm doing concentration meditations and I'm accessing particularly, there's these things called the absorption jhanas, which are very, very highly concentrated states. And I can access 4 of them. They're like a skill to access. And on the 3rd one, just shit gets weird for me, like really weird. It feels like, yeah, I'm like completely unsure what to make of it because I'm a very rational person. I don't believe everything.
Well, guess what? I was more than rational prior to what they call awakening. And yeah, you figure out things, it just clicks together, you know. As when before you were like, you had this abstract and ambiguous ideas about how, about the way things are, all of a sudden it just clicks and you're like, oh, so that's what it meant all along. And there's things are we
talking about insights? Like, so I find, yes. I find that after I've been, if I get my meditation up to like a couple of hours of insight meditation, I do the Mahasi Sayadaw style noting from the Theravada tradition, and I find I get little, like it's like a little thing, like a little puzzle unlocking in my mind, and it just feels like, oh fuck, like just a little piece of wisdom just unlocking, like it's kind of weird.
That's how it's supposed to be. Yeah. Your notion of unlocking things totally makes sense because it goes like this. If you're interested, I mean, if anybody is interested in that, I could just talk about it. Yeah,
please talk about it. I'm very interested. And I'm not like highly attained or anything. I've attained stream entry, but nothing beyond that. I'm like a first path guy.
Sure. Well, I don't want to try to sound condescending or anything like that. It's just that some things you can't say without sounding like that. So I'll just.
Yeah, I understand completely. Like attainments are attainments. Like if you've got.
Okay. Well, basically, the mind is a self-contained recursive system that's entirely comprised of information. If you're familiar with Fourier series, you know, like vectors and the circles, that kind of thing, turning around. Yes. So yeah. So what's going on here is that information as such, well, it's hard to describe, but it's a self-referential sort of construct that is not necessarily, well, there's 2 types of it, okay? I'm going to go a bit far here. There's a type of what you call a soul, right? Mm-hmm. And there's the type that's totally deterministic, like any computer program or whatever have you. The soul is the kind of a thing that's not necessarily bound by external limitations, so not necessarily described by them, while the letter it's entirely deterministic. So my point is this, to make sense of what's going on, you just have to think in terms of influences upon those systems, because we are here in this shared framework where those constructs, those systems, they interact with one another. And what you have in your attention is what ultimately has an effect on you, essentially, because you are that. Does that make sense?
Yes, kind of.
Right. Well, I hope I'll get there. We'll narrow down a bit more. So it's quite simple, but since we are in our ordinary state of being, we're not used to being like hyper aware. Like, you know what I'm talking about, right? When you're in deep meditation.
I know exactly what deep concentration states and deeply present feels like. It's like it imbues the mundane with like this sense of magic, like I did a couple of hours of of noting before breakfast the other day and went and ate bacon and eggs. And it was like every touch of breakfast on my tongue was like, this is outrageous. Where has this taste been all my life? It's just fucking so good.
Right. So essentially, normally we are not that aware, but when you come back from meditation, you're like, when you kind of return back to reality, which it really isn't, you can see things more clearly. Your thoughts are focused. You have no problem making sense of things. And then little by little, as you start to remember things about your past, about your future, maybe your presence, maybe your present condition, the things you're attached to, the things that are attached to you, and so on and so forth, they start to come back and they start to transform your belief system, let's call it, because everything it's based on assumptions. No axiom is possible without an underlying set of assumptions, right?
Mhm.
So when you return from a state of awareness, of just being, observation, there's nothing happening in the background, back to where you are now, those influences that you let into yourself previously, they start to work on you, but not in a way that you would notice outright. They're just there. You are accustomed to them. You are used to feeling them, and feeling is the right word here. But you are not used to paying attention to them, and that's the whole point of what I'm talking about. If you pay attention to exactly to what's going on with you at any given moment, if you document the changes in your cognition, in your emotions, particularly, you can tell, you can see the connections between things, why they are this or that way.
So do you like to put a name to it, or do you like make a mental note? Like I know some people do like a mental da 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 da, or and some other people, like the Burmese tradition is to actually name it, like say touching, hearing, self-conscious.
It's not. There is one thing that is not a thing that we're all made of, and as soon as you give it a name, it becomes something else. So you can't really talk about it. You can only acknowledge that it is. It's well, call it consciousness if you want. It's the present moment. It's the being. It's what is, not what. Because when you're trying to make sense of what is, you're getting away from that thing into your mind, into your thoughts, and you're trying to label it, you're trying to give it a name, and all of a sudden it's something else entirely, because your understanding of it can't be more complete than it is when you are observing it. So my point is that you should not be in the past or try to go into the future, but rather focus entirely on the present moment. So
Hey guys, I'm going to have to cut us off here because my wife wants me to take her for a massage. And before we go, thank you very much for your. Sorry, I didn't get your name.
Name is Shalva. I'm from Georgia.
Sorry, say again, please.
I'll write it down. It's Shalva.
Shalva, nice to meet you, Shalva. Thank you very much.
Likewise.
Thank you very much for your knowledge. I appreciate it, and it's always nice to meet fellow travelers. And
Thank you.
what I want to point out to you guys here is this, these wide 10-minute Bollinger Bands can be a pain in the ass. So if it stops trending here, if we get another close below these moving averages, we would stop trending. And then most likely it would be impossible, virtually impossible to pay the setup for a couple of hours. So when this happens, I'll just cover this quickly. You don't want to sit around like watching a screen like an idiot for 3 hours without taking a trade. So what I usually do is I select the Bollinger Band, I right click and we go add an alert. And most platforms have an alert. Usually you can, this one will, TradingView will send it to your phone or send an SMS. Really handy. And because once we stop trending, we need a Bollinger touch to do something again, to give us confirming evidence on the 10. So once that happens, you really don't want to waste your time in front of the screen because it's really, what's the right word? Frustrating to sit in front of the screen and not trade while you're waiting for a trade. And it tends to cause unforced errors because you're subconsciously hoping a trade will kick off and you miss shit that you would otherwise get. So thank you very much, guys. And if anyone wants the system, I'm gonna post the link for it. It's cheap. It's like under $200. And the Henry, okay, the moving averages are this is the 8 exponential moving average, 21 moving average. This is a 2 standard deviation, 20 period Bollinger Band. And this is average true range 14, which is the standard parameters on most platforms. Hope you enjoyed today, guys. I'm here to help and yeah, hope you enjoyed it.
Cheers, Scott. Thank you.
Thanks, Scott.
Take care, Julian. Be well. Thanks, Stephen. Good night, guys.